me.
Right here. Good evening, everyone. My name is Sudheer Vatsavaya. I'm a property investor, blogger, and someone who comes with 20 years of experience setting up systems for small businesses and enterprises alike. Now, I'm going to host tonight two great people whom I have known from a few years now and have been following their journey investing in property. And one of the guests, personally, I've known him for a long time. I just want to kind of get into the process of knowing their experiences building their property portfolio. And we got a good mix of buy to let and HMO investors on live today with me. My first guest, so he's someone who has built a successful working HMO portfolio and someone who has hosted a wonderful event called Square Mile Property Meet, which I think you probably by now have guessed, and someone who comes with a finance domain background as well, and someone who is quietly enjoying his time with a newborn since last few months. And he's none other than Aaron Cobb. Aaron, welcome to the show.
Thank you very much for inviting me. Thanks for having me today, Sudheer and Ravi.
Cool. And my second guest tonight, ladies and gentlemen, is someone whom I have known since age of 3. And I always say that he is my partner in crime in whatever I do. He has successfully invested and built a buy-to-let and a portfolio of plots in overseas, in India, where he comes from, and also in UK. I'm delighted to invite you, Ravi, onto the Limitless Live. Thanks for being here.
Thank you very much, Sudhir. I think it's definitely a pleasure being along with Aaron and yourself. It'll be fun.
Yes, indeed. So what we thought was, we'll kind of talk a bit of our experiences building HMOs and buy-to-lets. There is always a time where people will think, should I invest in HMOs or should I invest in buy-to-let? So let's hear that from these guys itself, right? So Aaron, probably I'll go with you first. If you probably can let us know why HMOs. I would have thought that when people start investing in property, they probably would want to go for a small engagements like buy-to-let, and then scale into HMOs, conversions, and so on. Why HMOs in the first instance itself? And are there any core principles you use to kind of build your portfolio on?
Yeah, I mean it's pretty simple. Like when we started to look at the strategy and what we wanted to do, and it's very obvious to us that we want to achieve cash flow.
Yeah.
And the quickest way to get the cash flow up is by investing in HMO, and one HMO you could expect 800 to £1,000 per month net profit, and compared to buy to let, maybe 200 to 250, maybe 300 maximum per property. So that's why that's a reason for us, like, because we think that it's more of a return on effort as well. So the amount of time that we spend looking for or buy to let deal and do a refurbishment, refinance, and tenant is not so much more if we're going to do HMO. So that was the reason why in the beginning, when we chose HMO to start with, we went straight into HMO without any buy to let experience, and it was pretty scary at that time.
I can imagine.
And a lot of unknown, and we do have a list of things that we are not sure at that time, and then we just go through the list one by one to tackle them and make sure that we reduce the risk and maximize the success of the HMO.
Awesome. So what did you do in terms of defining this is how my portfolio should be? HMO is to my mind, right? I feel like if I take my investment area, I feel like it's a saturated market, right? Liverpool and Wigan and St. Helens, that probably to me is a saturated market.
Yeah.
Now, where you invest is, if that's the case, how did you kind of differentiate yourself? Did you use any core techniques or principles to build your portfolio?
Yeah, absolutely. I mean, if you look at a lot of areas, most like popular areas in the UK, there are a lot of rooms out there, and yeah, I mean, you might be right that a lot of areas are saturated by a lot of rooms in the area. The things that we do is that every area that we enter and we decide to go ahead, we look at what is the average in the area, what's the average standard in the area, and then what we're trying to do is that we do something slightly better, and really building a product with longevity, in my view, is for example adding on suite and future proofing our HMO. So we're thinking about one step ahead. Like for example, in our area, most of the room doesn't have TV, for example, but we put all the TV port in all the rooms, and just in case in the future, 3-5 years time, when we become more competitive, all we need to do is put a TV in, and then we stand out from the crowd. So we are looking at the market very closely and trying to do every single something that is better than the competition, and if we do that, then our room will always rent.
Understood. So you're kind of differentiating yourself by building that the above average quality of HMO rooms in the area.
That's correct.
And obviously you probably have gone for getting cash flow higher than buy to lets, and probably that probably is the reason why you're able to enjoy your time with your kid right now. Right here. So thanks for that, Aaron. Ravi, I probably will flip that question a bit and ask you in terms of why buy to lets. That sounds appealing to me. If there's higher cash flow, and why did you think that you wanted to go with buy to let as a strategy?
Yeah, it's a natural progression. I think that is one of the key things that I thought, because I think firstly we started our journey with property investment in India for quite some time, and then we have a buy to let in India as well, which is the cash has multifold. It has grown. That was one aspect, and the second aspect is, again, even in UK, when we look at the natural progression of property investment. Probably buy to let is the base. It's like bread and butter. Compared to other strategies, probably again, this is just from personal situation. It's a very interesting variable that, Aaron, you mentioned, of return on effort. Brilliant. The other variable that we were looking at is return on investment. I think we were trying to maximize based on how much money we have and how much money we can get out of the investment, out of the deal as soon as possible. So if I have to pick up, one is it's a natural progression from where I was at the time. And secondly, it is one of the foundations of property investment. So it was a natural progression. And funny enough, even in UK, we started with a property which is a flat, and then slowly when we bought the next house, that became a buy to let investment in itself. So step by step it started growing. And yes, I completely agree from the cash flow perspective. When it comes to HMO, cash flow is less. There is an interesting variable as well. Initially, when we were investing, we were calculating on what kind of HMO will work and how many buy to lets we need. So there we thought, okay, fine, if we invest in 4 or 5 buy to lets over the period, the property price will increase. At the same time, the cash flow probably we will match with a HMO and things like that. I think the key bit, if I have to pick two reasons, one is the natural progression, and the other one is return on investment, getting the money out of the deal as soon as possible.
So your criteria or your principle of building a buy-to-let portfolio is whatever you invest, you just want to take it out. And is it fair to say that you probably felt buy-to-let you can take it out probably quicker or accurately, or what do you think?
Absolutely. In fact, I think, as Aaron mentioned, it was a bit risky in my head at that time to get into HMO. If we could invest in a buy to let and get the money out, which we did initially, and once the money is out, it is a cookie cutter process, rinse and repeat, and which is what we have been doing. So that way we have been able to build the portfolio.
Can I ask a question?
Of course, yes.
Yeah. So Ravi, like how do you know you can pull most of the money out when you go to buy to let? When you do buy to let?
It's an interesting question, Aaron. Firstly, I think based on the research, it won't work for all the buy-to-lets. People do think that, okay, if I just buy a property, I'll be able to get the money out. But the key thing is to find out the property which can enable you to do that. Once you get that, and if you negotiate the deal based on the refurbishment and work out the numbers, it is possible. If I take an example of the first property, the deal that we have worked out, literally we invested in, we bought it for 46K cash purchase, and it was refinanced for 80K. So with the refurb of about 18K money out. And once that money is out, it's rinse and repeat. But again, having said that, it's a point as well, because given in the COVID situation, if you ask the refinance, will the refinance be the same as the other scenarios? It might not be possible. But having said that, there are success stories and there are challenging stories as well. But in
let's
our case, what we did do was did a thorough research on the area and the property, and that helped in getting the money out.
Yeah, I think Aaron, to some extent, what also helped is in the same street where we were trying to invest in buy-to-lets, we actually got a house next to the already existing buy-to-let we have, so we could kind of map the pre-financed price for the house we already have and put another 5K on top of it for the next property. And likewise, our properties probably are really close by. It's kind of a subset of streets that we used where the done up values were really coming up, isn't it? That's what we do in the area analysis, isn't it? You pick your streets,
Yeah.
and where you know that there's a proven case of refinance meeting the numbers that we are looking for. And also it also depends on, while we say cookie cutter, the kind of quality refurb that you will do.
Definitely, yeah.
So
Brilliant.
yeah. So Ravi, if I just to answer Aaron's question in a different way, we look at something called deal profile when we invest in buy-to-let. I don't think it's a big secret, but what we call deal profile is a combination of return on investment, cash flow, and money left in the deal. So what we try to ensure, I wouldn't say that we have been able to do that for all the deals, but most of the deals, what we try to ensure is the money left in the deal is either 5,000 or less, right? But if Ravi, correct me if I'm wrong, if you now take all the rentals that we have got so far, right, and if you also take the money left in the deal across the portfolio, are we kind of getting close to that MIMO state?
Yeah, I think roughly around 2 grand is left, which means that the properties we are making free money without.
I'm dying to kind of get some tips from you as well on this one, because you have that background of finance, and am I right to say that you probably specialize in risk management?
Yes.
Right. So where I was wanting to gain some insights into is what kind of funding challenges do you see when you build your HMO? I might be wrong, but couple of investors that I spoke to, and we analyzed HMO deals in Liverpool where investors were actually investing. We actually have taken permissions to go and visit their HMOs. We could see that people were leaving close to 40K, 50K, 60K kind of money, which is where I think we were a little uncomfortable, because our criteria, as Ravi mentioned, was take out as much money as you can so you can invest, right? And you go with those principles taught in your education. But if I now flip that around and say, obviously people go and invest with a view that we'll get cash flow, which is another thing that we are considering now as well, me and Ravi. What kind of funding challenges or finance challenges do you see building a portfolio when you leave money in, and the risks that are involved, and in possible mitigations, which is what I'm more keen on, to counter those risks that you see?
That is a very big topic in terms of
it is indeed
financing. So you're right. I mean, you pointed out the after refinance, like there are two parts of it. Of course, like firstly, you need to have a funding and finance in place to develop the HMO, to buy the HMO, and and that is the first step. Like for people who have no landlord experience, it might be a bit challenging, but it can be done.
Yeah.
Like you can use a bridging loan for 6 months and then refinance. So in
Yeah.
terms of purchasing, it depends on your experience and your where you live as well. In terms, if you're overseas investors, that is a bit make it even harder. So
Yeah.
I think the first step is to get the funding to purchase and to develop the HMO, and then the
Yeah.
second phase is really refinance. This itself is a huge topic, because it could range from small HMO without ensuite, and then you could like all ensuite HMO up to 6 people, and then we have 7 people or more. Then you tend to be able to use commercial mortgage, commercial valuation, where you pull, you would expect to pull more money out from your deal. So you can think of I think at the end of the day is it's a balance between how much money do you want to put in and left in, versus how much interest rate are you willing to pay. Because when you use commercial finance, your interest rate will be higher, but you leave very little money in. Could be very similar to what you just said, like in the buy to let, but you kind of inflated the value that is way above the average. So it's not a bricks and mortar valuation, right? So, but if you do like up to 6 people, most of the time you won't be able to achieve commercial valuation. When you work on a bricks and mortar, that's where you see there's a 30, 40 or 60K left in the deal, and that's likely to be bricks and mortar valuation. So from finance perspective, there's one thing a lot of people don't think about is the leverage. A lot of people thinking about pull all the money out. What it means by pull all the money out is that you are highly leveraging in HMO term, and you exposed to a very high debt and a very high interest rate, tend to be high interest rate, and there's some terms in HMO for commercial mortgage is not the same as buy-to-let mortgage. What it means is that they could come after you to ask for more money if they think the property is going down in value. But in buy-to-let mortgage, in theory, most of the mortgage I understand is that as long as you pay the mortgage, even though if the value goes down, they can't come back to you and ask for more money. But for commercial valuation, they can do that, But those are people you see that doing HMO that pull all or most of their money out. That's what happening. They use very specialist commercial products, and that tend to be least favorable in terms of their term, and then the interest rate tend to be around 1% higher than bricks and mortar valuation HMO. So that itself is quite a lot of cover to cover in terms of financing, and of course for investors who develop a more creative, what people tend to do is that I do it myself as well sometimes, is that when the money left in, for example, let's say if 50K money left in, then what you can do is that you got private investors have that money and place that money to replace your money and pull that money out. Okay.
Brilliant.
And then in that case, you are no money left in. Right, no money left in, and then you share part of the rental with the investors, and that is another way to look at money in, money out. But one thing that most people do not think about is that what about in the future? Like, what about in a few years' time, 3, 5, 10 years' time, and then an investor want the money back? So you're going to have a debt repayment strategy. How are you going to repay the debt from investors?
Indeed, that's very critical, isn't it? When me and Ravi, we kind of talk about investment period for each property, right? So as an average, what we say is probably if we buy a buy to let, we'll probably leave it for say 7 years. After that, it's a ground zero and see what are your exits. You got to revalidate the exits that you have put into that property when you're purchasing it, right? Probably that's an exercise we need to do every year in terms of looking at will the exit still work or not, and if not, what we need to do. Cool. That was really interesting, guys. And what I gather from your responses is that, both of your responses is that if somebody is asking a question to themselves saying that should I invest in buy to let or should I invest in HMO, it looks like it is more dependent on what you want and what your situation is. Like, Ravi, you probably mentioned you wanted to go for the low risk and take the money out kind of stuff, and you wanted a natural or gradual progression, while Aaron was wanting to take that bit of risk and secure the higher cash flow and probably build a portfolio, that credible portfolio which he has done, right? So it almost feels like it is what you want and what is your situation than somebody suggesting go and invest in HMOs or go and invest in buy to let or buy to let is dead,
What
right?
works for you?
Yeah, perfect. Right, I'm back to you, Ravi, again. This time, so I'll probably say this, knowing, seeing Ravi in that at that point in time when I was staying next to him, and a couple of times in my case as well. More than a challenge, I'd say headache. So, what is that biggest headache or a challenge that made you think in terms of, or made you see buy-to-let property investment or property investment in general with a different lens altogether? What has been that biggest challenge for you?
If I have to pick the biggest challenge,
Mm.
Sudhir, I know at times we both have some telepathic connection.
Oh,
This is
yes.
this seriously did happen when generally we go on a drive, and on this occasion I was quiet, not talking a word. Usually I'm not that quiet, and Sudhir asked me, "Ravi, are you okay?" And my answer was, "No, I'm not okay." Definitely, it would be smiling and bubbly. But the reason why it
Yeah,
was not okay, one of the biggest challenges is at that time, a builder walked away with 7 grand. And that was one of the initial properties that we started with.
yeah,
Mm-hmm.
And, the mindset challenges kick in. And I would think, how can anybody do this? Why could people do this? Um, but again, that's the challenge. That's one of the biggest challenges, I would say. It is not that we were not able to recoup the money, but the challenge is the human to human relationships and things like that.
yeah,
But
yeah,
that's where I think this mindset and property mindset kicks in.
yeah,
But what we did do with that challenge, or how did the challenge happen? Here is the lessons, guys, along with the challenge as well. Is this builder was recommended by an existing property investor, but what we didn't do, or what I didn't do, is a proper due diligence. Two things. One is a proper due diligence of who the builder is. Is the company okay? Has he done proper refurbs and things like that? Uh,
yeah,
this is the initial stages, and that is one aspect. And the second aspect is even after the due diligence, you got to be careful about the schedule of works. Something as simple as that. If you've agreed a schedule of works, don't make the payment thinking that the builder will be doing more for you. They won't. So I was in the opinion that, okay, let's build a relationship so that we'll get a better quality build, and we can give a portfolio across to him, and so on and so forth. But it backfired.
yeah.
Now, when that challenge happened, so in this, Sudhir, sorry, probably it's a bit prolonged answer. I wanted to
No, that's
show
fine. Go
what
for
the
it. That's
challenge
fine.
is,
Yeah.
why the challenge happened, and at the same time, what did we do to overcome that
Yeah.
challenge
How did you
initially?
overcome that? Yeah.
So the first thing, generally, people ask wrong questions in the head, which comes up with wrong answers. For example, there was a time when I was asking the question, why me? Um, when money is gone, it's not just the builder, it's also your head, it's also the family head.
Yeah. Yeah.
Things happen. So it's very easy to fall into the trap of why me. And why
Yeah.
me means nothing at all whatsoever. But immediately we went into the next question: what can I do about this situation?
Yeah.
So, as soon as I got into that question of what can I do about it, we immediately engaged a different builder, firstly.
Mm.
And secondly, we wanted to get as much money out of the deal still, irrespective of having that loss.
Yeah.
So we did a couple of things similar to what Aaron was mentioning. One, we did a good quality refill. And secondly, since it was a cash purchase as well, the refinance was happening straight away. The guy was coming in, and so what we did do was did a bit of dressing, did a refinance document, and all that stuff, and that helped some of the money to be recouped.
Yeah.
Meaning, generally, if that activity was not done, probably the property would have been revalued at probably 70K. But having done these exercises, it was revalued at 80K, which
Yeah.
meant most of the money was out. This is what, like before these interviews, we were looking at all the deals, and when I was saying that some money is still stuck, it is that builder who has taken the money. But for me, draw the line, and at the moment we're building better portfolio. And more than anything, the biggest lesson that we learned is have the right mindset, because any investment, including property investment, will have challenges. All
Yeah.
you need to do is how did you get into that, and how can you get out of the situation and keep growing. That's the key thing that we picked up.
Indeed, indeed. Thanks for that, Ravi. I think thanks for sharing that. So, Aaron, at this point,
In fact,
probably
thanks
I'll
for asking that question. Are you
no. I
okay?
mean, these are the things that
That's right.
we need to say, and also our experiences, so that people who are starting on will not think that property is just buy and sell property. There are loads to it.
Yeah.
It's not just property education. That's same for you and for me, but how do you interpret it? The mindset that you need to be building within you to kind of take those losses as well on the sidelines is something which I think comes out clearly, right? Aaron, I have a small topic that bothers me. Maybe you
Sure.
can put my mind to rest here.
Mm-hmm.
Square mile property meet, right?
Mm-hmm.
Now this one, I love that event. Whenever you put those updates on Facebook, and then I can see on Facebook each time that there's a huge audience as well, and you have been running that, hosting that property meet, um, uh,
Successfully.
quite a lot since last 1 to 1.5 year. But I saw a post which says grand finale. What is that? Is that for just for the year, or what's in your mind?
Yeah, it's a really good question, Sudhir. We have been running this for nearly 3 years now, from just literally one person meeting up over coffee up to now. We have sold 1,200 tickets in the past 2 years,
Yeah.
and we came a
Wow.
long way from a meeting in a pub to bring it to the formal networking event, and then now
Yeah.
COVID, we brought it to Zoom. So a lot
Yeah.
of things that we do, especially physical, we do it very differently to most other property meet, because we really focus on the implementation and the community side of it. So for every topic, we do something after the presentation, like role play, group discussion, and all these things, interactive things that people can take away after
Yeah.
the presentation. Is just not about like the speakers, also about the audience. So yeah, I mean, like it's time, I think, for us to pause and rethink and reassess the whole event, because it's partly because of COVID, because there's so many events out there right now, and we are not
Indeed.
doing
Yeah.
something that is very different to most other people, and we like to do something different, and it's just a natural kind of a timing to pause and rethink and reassess. I think it's important for everyone to rethink what they want to do as well, and for me and for my
Indeed. Indeed.
business, and how we can best serve other people, and work better together. So that is the reason why we're having the final property meet on next Saturday. If I can mention that quickly, is
Yeah.
next Saturday, final event, 14th of November at 10 o'clock in the mornings. The reason we put it at 10 o'clock is that so we get UK audience, as well as
Yeah.
audience from Asia, Singapore, Malaysia, Hong Kong. They are 6 o'clock at night, so they can join us as well.
Perfect. I'm registered to that, by the way, and
Yeah,
please do add the link for people to register if in the
mm-hmm.
comment section, if you're okay after
Yeah,
this
sure. I will do that later.
live. Yeah. Thank you.
Mm-hmm.
Aaron, I would
And
love to join as well. I think with me, my life is revolving around 11 plus exams for my daughter. So I believe I'll be a taxi driver that day, but I'll try and join in over the phone.
Cool. I'll keep you updated on what's discussed, Ravi.
You can listen from your phone if you want to.
Yeah. That's what I'll do.
Yeah.
I'll definitely join. As
Cool.
long as I'm not being the active taxi driver, I will join join on phone.
Good. Right. Aaron, if I have to ask the same question in terms of what if you have to kind of relay one key challenge that you came across in your journey of building that HMO portfolio, and how you managed to kind of overcome that?
I think to quickly mention what Ravi has said, builder is a big thing, is one of the most challenging thing in every property investing journey, especially us that trying to add value through refurbishment. When you talk about challenge, I would think that for me is in the beginning, especially when I started in property, is the time is the most challenging part, because by not having enough time, it just like things are not moving forward. Because I work very long hour every week, like 50, 60 hours. So my normal working hour is 8 to 6, like sometimes 8 to 8, 8 to 10 during busy periods. So it just makes me feel very impossible, but it just need to push through it week by week by week. And the only time I have full day is a Saturday and Sunday. And Sunday, people not working. Saturday, maybe half day. Some estate agent don't, letting agent don't work, and some builders don't work Saturday. So it just make it really not easy for me at that time. And because the work is so intense, I work late, and then it just bit by bit every day you do a little bit, and when you have a bit more time, do a bit more. And that was one of the real challenge for me at that time and I started about 3 years ago, is to overcome the time and the time issue. So it's just really hard at that time. So what I did was really to do everything I can in my spare time. My lunchtime. And I'm not a morning person, so I'm not waking up early. So I'm doing late nights. And weekend, definitely, since we started, like I can't remember a time that I stopped during weekend. So every weekend, just doing something about property research or pushing deal forward, etc. All the viewing and interviewing builders and meeting up people is all on Saturday. That's the only time I have. I just don't have time to go to any party, any birthday parties, meeting friends, and there's no time for that. So that is the sacrifice that I did at that time when I started 3 years ago. And meeting people as well. So it's because of no time, it's hard to meet people. So then I came up with a great idea, like a square mile property meet is to meeting people in scale, so every people that says that want to meet with me, and say let's go to square mile property meet, and then we will hold an event, and then we'll meet there. So it's kind of like maximize the time that I have with limited time, meet as many people as possible. So one of the ways is I use an event basically, and then it grew from one person to more than 600 right now.
Yeah. Nice. Cool. So I still remember, 2 years ago, or probably, when we were trying to kind of build our buy-to-let portfolio as well. I used to see you used to be very regular in terms of coming and doing Facebook Lives. I used to kind of admire that you used to have your the style of having a book and a pen and noting down the points and conveying exactly what needs to be conveyed. Really good. I used to tell Ravi, Aaron is going for it again. So well done on that. And that's the time when we were busy as well. I can relate to what you're saying. You do your day job, come back, try and build your power teams and stuff, property teams and stuff, and then for me and Ravi, it was kind of blog, pick the topics, relate our experiences, and convey that through the blog, and so on, right? So we could see those similarities when you are talking about the time.
Yeah, absolutely.
Cool. So Ravi, back to you again. So one statement that comes out in the market, right? And I saw so many people say this, and very well established, reputed property investors say this. So I have a reason to believe I can't ignore their comments, right? So I thought I'll probably take your view onto what do you think when people say buy to let is dead, right? That effectively is your strategy and my strategy too. And I probably want to stick to buy to let strategy, probably in a bigger scale, like rather than buying single lets, I would like to buy a commercial property and convert that into flats kind of stuff. But still, it's buy to let effectively. The way I see it, you can call it conversion, but effectively, what I'm having is more number of flats or residential properties in hand, right? So when people say buy to let is dead, and if I now ask an extension to that, what do you see future holds, near term future holds, at least for next 1 year or so for buy to lets?
And it's an interesting one, Sudhir. Meaning, for me, life is all about perceptions. What did people perceive by what has been said?
Yeah.
I mean, buy-to-let is dead. Personally, I think we cannot generalize it
Hmm.
because I still think, again, it should be a personal situation and personal strategy of where a person is. For example, if buy-to-let is dead, and if somebody has to go directly for commercial conversion, for example, it's a risky thing. So again, from my perspective, there will always be demand for buy-to-lets. And even in the current situation when COVID is happening or Brexit is happening, there is meaning people, if they want a personal space, a family or couple, there would be a demand for buy-to-let properties,
Yeah.
and especially with the school catchments and whatnot. Um, Having said that, recently there has been a temporary hike in the property prices, given the stamp duty free and whatnot. At the same time, the legislations are changing, the taxation rules are changing. So there are things happening in buy-to-let sector as well. But personally, I would think that it is a kind of bread and butter for anybody who wants to get into property investment, to get to
Yeah.
know the nitty-gritties of different aspects of the property investment. At the same time, a cash flow of £250 with no or less money in the deal, it's still a good strategy for so many of the people.
Yeah.
The second aspect you have answered in the question that you while you're asking that it is the development is a next progression. So it's not per se buy to let of buying a terrace property and giving back a terrace property. Like the current project, what we are doing, take a terrace property, convert it into 2 units, which means the
Yeah.
cash flow is increasing. It is still buy
Yeah.
to let, but it is a different type of buy to let.
Hmm.
But if I have to be honest, if you ask me, Ravi, would you be able to do that on day one? My answer would be probably no.
Yeah.
And that's where I think I wouldn't generalize the statement of buy to let is dead. Buy to let is still profitable and a natural progression. That is my perspective for
Yeah.
anybody who is entering into the property market. And there's still lots of money that can be made out of buy to let.
Yeah.
Only thing that I would say is, I'm sure you would agree with me as well, is educate yourself, because people can
Indeed.
lose money even in as simple strategy as buy to let as well. Uh,
Yeah. Yeah.
and keep yourself abreast with all the legislation changes, the taxation changes. If not, any strategy can bite us back, including buy to let. So
Understood.
if I have to summarize, I
Yeah.
wouldn't generalize that buy-to-let is dead. It is there as a strategy for so many people, and there is a good demand for buy-to-let properties for families, young couples, school catchments, and lots of
Yeah.
reasons.
So
People wanting
would it,
private space.
indeed, and would it be logical to say that when people say buy to let is dead, that probably is because of these regulation changes that have come into play? And if a person is owning a portfolio on a personal name, the cash flow probably has taken quite a lot of hit, isn't it?
Yeah, yeah. It's
And
Section 24 effectively,
Section
uh,
24, yeah.
and yeah, and it'll be interesting to see how the taxation rules and things are going to change, given that there is a lot of deficit or investment that is going into this COVID scenario. But the flip side also is given the COVID and Brexit, next year there could be lots of deals out there in the market.
Yeah, I can already see
So
that
people
there's
can
lots of
gear up.
yeah. Sorry,
Yeah.
sorry if I was interrupting you. Go for it.
No. I was saying the same thing. Like people can gear up for investments in buy-to-lets with good
Indeed.
deals.
Indeed. Cool. Perfect. I think that's pretty much it, guys. I got for today, and I'm really, really pleased that we managed to kind of discuss out on your experiences on building a portfolio of HMO properties and buy-to-let properties, and a bit of differences between both the title of HMO versus buy-to-let. Probably this live probably have given some idea to most of the people who are starting out in investing in property in terms of what they need to do, whether they can go for buy to let or HMOs, and in what scenarios they can go, the risks that people should be aware of, and what future holds. Any questions from both of you guys?
No, we got a question. There's someone asking what due diligence do I do to assess viability of an HMO?
Yeah, go for it if you want to answer, or you can
Yeah,
answer
sure.
later as well. It's up to you.
Yeah, definitely. I can do a quick answer of due diligence for HMO.
Sure.
I think it's really part of the research that we do even before we get in the HMO. That is research, a thorough research in terms of area. Similar to yours, what you just said, Sudheer, which is on the street level. So
Yeah.
even within the area, you got a sub area, and in sub area you got like a street level. What kind
Yeah.
of target tenant do you want to target in those street level, and what
Yeah.
works? So that is very detailed research. That is in general will be, we look at the quantitative side and the qualitative side. The quantitative will be things that you mentioned, like the numbers, return on investment, and what is the demand in the area. Look at the spare rooms, how many people are
Yeah.
looking for rooms, how many rooms available. That's a very
Yeah.
good starting point. And look at the standard in the area. And the qualitative side is more of like a feel of it, like go to the area and view it, and you could view other people's property on the spare on go to the rooms that you think
Indeed.
just present as a tenant, and
Mm.
just do a lot of research, talking lots of people who are doing it in the area, like builders, neighbors, talk to people on the street, letting agents, estate agents, investors, developers, anyone really you can speak to in that area, and brokers, anyone you can think of that relate to property. What I
Yeah.
like to do always is two things, like the offline and online research. The online research is
Yeah.
desktop research. You can do a lot of things and look at the floor plan, looking at a lot of things online, like check the street
The crime
level.
rates. Yeah.
And the online thing is most of people can do really well, like at home. But the things that a lot of people miss, I think, in my opinion, is the offline stuff. And maybe they're not familiar with the area, maybe they are not based in the area, maybe they are just don't feel like going to the area. That's a big thing
Yeah.
that people are missing out, because if you go to the area, walk the street, and talk to people on that street, you find a
Yeah.
lot, not a lot. I mean, what I mean is that you find additional information that is not available online, and you'll be able to
Indeed.
see something, physically see something that you cannot see online, even with a Google, like the Google Street. So something,
Yeah.
for example, what have the neighbors have done? Is the extension, is a lot of conversion? What are other people doing in the area? And one thing I
Yeah.
like to do recently, I found is really powerful, is that I know you're doing a flat conversion right now. This will be relevant for you, is to go to the planning portal of your
Yeah.
area council and
Yeah.
search in keyword, for example, flat conversion for yours. And then by that, you
Yeah.
see what type of property is converted to flat successfully,
Yeah.
right? And what
Yeah.
sort of objections planners have put in. And then you will see
Indeed.
all the address, all the information, architect contact, like all the contact is there. A planning
Yeah.
consultant, everything is on there. So you don't need to
Indeed.
ask around like who is architect to use, planning consultant to use. The people successfully have done the deal. Even the location, the exact address, exact floor plan, before and after is all there. So it's just amazed me like how much information you can find online, and then from
Is
there
there? Yeah.
You can go into the application, you can call the architect, call the planning consultant, find out about the deal, and then can repeat in on the same street or nearby.
Yeah, and few tips if I can
Great
add.
tip.
When we were doing a buy to let kind of area analysis, if you like,
Yeah.
right? So uh, Ravi and me, we took two taxis, right? Taxi drivers. My goodness, the depth of information they can give you, the taxi drivers, on which street is good and which street is not good to live, right? You don't need to go and say I'm an investor and stuff, but just go and say if I'm trying to move into that location,
Yeah.
what are the safe areas for me to live?
Yeah.
So that the information we got from those two taxi drivers when we went independently around the streets was awesome. Actually, we couldn't find that information anywhere.
Local
And
knowledge.
you're right, we went walking the streets as well and asking people on in terms of what's happening in the area and so on.
Yeah.
That has to be done.
Absolutely.
Cool. Any more questions you guys can see?
No, I can see someone commenting 30 people line up to view my property up for rent. Buy to let is not that, in my opinion.
I love that. Absolutely, it's not dead. You know what? The reason why I say I love that is because while I hear from some of the people that it is because of whatever is happening, right? COVID, Brexit, whatever you name it,
Uh-huh.
it has become a little difficult to let HMO rooms unless they do like what you did, Aaron, in terms of get to that top 1-2% of the quality of rooms.
Yeah.
On the other hand, if you see the buy to let, my letting agent asks us, do you have any properties to let? And they also kind of come and say, if you have a property, we can let it in a week, right?
Yeah.
So that tells something, isn't it? I can
That's
relate to
brilliant.
that comment of 30 people lining up to get into a buy to let. Yeah, absolutely. Guys, it has been real pleasure to host both of you, and I hope the community has got something out of this live. And if they want us to do more, we are quite happy to jump in. Aaron, I'll probably trouble you more and then do a bit more videos like this and with Ravi. That's okay.
Yeah, sure. It's a bit different from your blogging, isn't it? You have been used to writing and then
Absolutely, yeah.
Blogging is not my
Anything for
comfort zone.
content.
This is better.
you can just take this live stream and then put it in your blog correctly.
Yeah, absolutely. Right. Thank you, guys. Thanks for your time tonight, and we'll talk to you again soon.
No problem. See you all.
Thank you very much.
Cheers,
Thank you
guys.
very much.
Bye.
And Sudheer, thank you.
Cheers. Bye.
Bye.
Bye. Bye.